Welcome back. You're watching Your World at 10. Now, it's been a strong second quarter for the FMCG sector, with most FMCG companies clocking good volume growth, good sales growth. So to understand better how sustainable this growth is and what story it tells us about consumer demand, well, we're joined by Kurush Grant, CEO of the tobacco division at ITC, and Sunil Dugal, the CEO of Dabur. Mr. Grant, let me start with you. It's a good quarter for FMCG, like I just said. Most companies have averaged about a 13% growth in sales. ITC has led from the front. What do you attribute as the factors that have contributed to these strong earnings numbers at ITC and across the sector?
I think it's a combination of 3 or 4 things. One is strategic cost management across the board, and here I'm really talking about ITC in particular. The second is product innovation, which has been there right across various FMCG businesses of ours. The third is, I think, some pretty innovative marketing and positioning of our products, and followed by obviously the fact that there is some amount of base effects too, but more importantly, the industry definitely appears to be showing a healthy growth both in urban as well as in rural sectors.
Mr. Grant, you mentioned low base effect. That might have helped in sales growth. Did declining raw material prices help boost profitability? And how sustainable is the growth both in sales and profit?
Actually, on this issue of decline of raw material prices, it varies so considerably from commodity to commodity. If I were to do a weighted average for ITC, actually there has not really been a significant decline at all of raw material commodity or prices. In fact, I would say that there's been a marginal growth actually if you were to do it on a year-to-year basis. Because some commodities have clearly declined, some commodities have gone up, and so on and so forth.
All right, you did tell me outside of this interview that you thought your margin growth was sustainable. Let me break it down into your tobacco business and your non-tobacco FMCG business. The tobacco business sales grew at about 22%. I think volume growth was around 7%. This despite, sort of negative factors like the earlier discontinuation of non-filter cigarettes. Could you share more details with us on the factors that have contributed to this performance in tobacco?
Discontinuing of non-filter cigarettes actually happened quite some time back, nearly 15, 18 months back. But excluding that, if one were to look at the cigarette business, once again it was a combination of cost management, because in the cigarette business raw material prices went up dramatically actually, particularly at leaf prices, as you may be aware, and product innovation. There's a whole range of new products in the marketplace which is paying off dividends and doing well.
How sustainable is this performance in the tobacco business?
Well, I would not obviously be talking about percentages with you, but our track record has shown that we've been growing pretty consistently over time, and I see no reason why that should change actually.
All right, I know you are hesitant to give details, but let me probe a little further on the non-tobacco FMCG business. When will it turn profitable? You've been able to decline or reduce losses, quarter on quarter. Could you give us more details also on the performance of your biscuit brands? Have they turned profitable? And what about snack brand Bingo?
Non-tobacco FMCG businesses, the reality, the story remains the same. Good strategic cost management, product innovation, aggressiveness in the marketplace. It's a combination of all of these. And these are factors which by definition are long-term factors rather than short-term factors.
All right. You're not going to give me more specifics on the break-evens, etc. So let me change tack. Mr. Grant, it's a dynamic business environment, what with inflation moving up, especially in food prices, and the interest rate cycle about to turn. What does this mean for future prospects for FMCG and specifically for IT? What does this mean for the consumption story?
Yeah, actually you hit the nail on the head when you use the word that the environment is dynamic. And because it's dynamic, it's really difficult to, make a prognosis because things can go up, things can go down. However, having said that, there are certain basic issues which need to be considered. We are heading towards a regime where the entire tax format of a country may change. I'm referring to GST. Sure. And GST is it's supposed to be around the corner, although people have been making noises that, the governments may not be ready in time. So we'll have to wait and see on that. But depending on what happens as far as taxation is concerned, that is going to make a difference one way or the other. Once again, we don't know which way it's going to move because it'll have to depend finally on what goes into GST, the format of GST, etc., which we don't know as yet. So a large portion of the future of FMCG, at least the short-term future, I'm not talking about long-term future, will depend on what happens to taxation systems and policies in the country. Having said that, I know the phrase demographic dividend has been overused, etc. But the reality is that the larger number of people consistently coming into a working society, and with the middle class growing consistently as the way it has been, the long-term, medium to long-term effect on FMCG sales is bound to be good. So remember, in FMCG, what do? We sell small amounts of things to lots and lots of people.
Sure.
And as lots and lots of people come into the consuming market, hopefully FMCG will also grow.
All right, future prospects are good. Thanks, Mr. Grant, for joining us. Kurush Grant there on the future prospects of ITC and FMCG. Now for another view on FMCG, this time from a company that operates in a different niche, Dabur, who is focused more on herbal products, personal care, oral care and food. Joining me tonight, Dabur CEO Sunil Duggal. Mr. Duggal, thanks very much for being on Your World at 10. What's driving this strong FMCG earnings performance? Dabur's top line grew about 23%, volume growth 14%, profitability up 30%. What does this tell us about the domestic consumption story in your assessment?
Well, this domestic consumption story remains strong. We're seeing a lot of growth coming from the rural areas, and I think that's been pivotal in the whole demand story. The rural growth has been exemplary, and this is despite a very poor monsoon and actually a decline in agri-produce. So I think that is really where the government stimuli, which has put enormous sums of money in the hands of the rural consumer, has paid dividends as far as companies like ours are concerned in terms of generating rural demand. Another source of growth has been the international business, but that's a different story. But as far as the India story is concerned, the demand is significantly rural in origin.
All right, let me focus it on the domestic story because we're really, truly trying to understand how long this can last. In your assessment, how sustainable is this growth, both top line and bottom line, not just for your company, but across FMCG?
Let's take the demand side first. Now, this huge demand which we've seen coming from the rural areas is despite a very poor monsoon, 70% of the country being classified as drought-ridden, and a shrinkage in agri-income to the extent of 2%. Now, despite all these negative factors and an overall economic downturn, so despite these negative factors, if we've been able to show this kind of growth, I think this augurs very well for the future. So if by the law of averages the next year monsoon is a good one, as it ought to be, then I think we would see a totally different trajectory of demand. So we are pretty optimistic about the sustainability of this rural demand. And I think this will power us well into the future, well beyond 3 to 6 quarters.
Mr. Duggal, let me ask you the same question I just put to Kurush Grant of ITC. It's a changing economic environment, what with inflation and interest rates moving up. What impact is this likely to have on purchasing power in the domestic economy and hence FMCG demand?
Well, I think the interest rates hike will not really particularly affect our business. Ours is a non-discretionary item, so people will buy them irrespective. I think what will happen perhaps, and we'll see that in the fourth quarter, is inflation beginning to chip away at margins, especially at the gross level. But we believe that better management of cost, both advertising and promotion, as well as overheads, would enable us to mitigate that impact, and we'll still see strong margin expansion happening. So I'm not too worried about the margin situation as of now. I think if the demand continues to be robust, as we anticipate, the margin story will take care of itself.
I know you're saying chip away of margins. Will you, in some sense, pass on that increased raw material cost if that happens to consumers? So what I'm trying to determine is, will the growth that comes in the next few quarters be volume-led growth or value-led growth?
I believe so. I think 2/3 or even more than that, 75% of our growth has been volume-driven. Now, that might shrink a little bit, and we have a little bit of price increases starting early next year on the back of higher inflation. But even if the price increases happen, and we hope they won't, but we may be forced to take them, they will not be of a magnitude which will lead to any demand contraction. So there'll be moderate price increases of the extent of 2, 3, 4%. So I don't think there should be any issue with the consumer. If the brands have pricing power, there is normally not a big problem in translating them into a higher price level.
All right, so you're saying you'll share the burden with the consumer. You sound very buoyant for the next few quarters. What do you identify as some of the key challenges to this growth story or this growth forecast? Party poopers, if you will.
I think another bad monsoon which leads to further contraction in the agri output could be a party pooper, and I think that is the only thing which worries me. Now, obviously, the government will serve to mitigate that impact by even more stimuli, but there's a limit to what the government can do. And that would perhaps lead to some kind of contraction in demand. But again, like I said, the law of averages indicates that this will not happen. And I think we are pretty sanguine about the outcome.
All right, one final question then to you. GST was one of the big challenges according to ITC when I just spoke to Kurush Grant earlier. Would you agree that's a big challenge according to you to this growth story?
No, I don't think that is really an issue.
All right, Mr. Dugal, we'll leave it there. Thank you very much for joining us. That was Sunil Dugal of Dabur. And that gives you a sense of what the FMCG industry is expecting over the next few quarters and what that means in terms of the domestic consumption story. Time for a quick break on Your World at 10. Up next, all the national and political